The real impact if you're self-employed and trading for 1 year compared to trading for 2 years. The following will be relevant whether you are a limited company or a sole trader, whether you've been trading for 1 year or 2 years. Anytime we look at potential borrowing will be a hypothetical scenario. Obviously, your circumstances are individual to you. Please speak to a mortgage broker if you're unsure what you can do with your borrowing if you're self-employed or what your mortgage options are. What we're going to look at first are the lenders available to you if you've been trading for 1 year. Then we're going to look at if you've been trading for 2 years and compare the lenders available. So let's look at lenders available if you've been trading for 1 year. Now, the first thing to really say is that a lot of these lenders are smaller building societies or lenders that are more specialist, lenders that you would typically look at if you've got adverse credit, for example, like Bluestone. So you've got Dudley Foundation. Now, Halifax are the main high street lender that will consider 1 year's trading if you're self-employed. HSBC, maybe. Kensington, another good one to look at if you've got 1 year's trading behind you. But again, they're more specialists, so their rates are typically a fair bit higher. Pepper, another specialist lender. So there you go for your options if you've been trading for 1 year. There's not many. Yes, there are a number of smaller building societies or specialist lenders, but when it comes to high street, you're really looking at Halifax. So we've looked at the lenders available if you've been trading for 1 year if you're self-employed. Now let's look at the lenders available if you've been trading for a minimum of 2 years. So everyone here with a red cross, so like Accord, Bank of Ireland, Barclays, Coventry here, they are only available if you've been trading for 2 years. And to be honest with you, it's a vast majority of lenders. Leeds, Metro, Nationwide, NatWest, Santander, Skipton. Vast majority of lenders will accept you if you're self-employed if you've been trading for a minimum of 2 years compared to 1. So we've looked at the lenders available who can actually consider giving you a mortgage whether you've been trading for 1 year or 2 year. But what about when it comes to lending? What impact can it have if you've been trading for 1 year or 2 years if you're self-employed? So we're going to look at a lender calculator and 1 year's trading. So it's one applicant, purchase of £250,000, borrowing £200,000, 80% loan to value, loan term of 35 years. Income, so it's self-employed, in this case a sole trader, would be the same if it's a limited company. So net profit current year £42,000. There's nothing in the previous year because remember this is someone who's been trading for 1 year. Got no outgoings, and let's calculate how much they could borrow. So £188,580. So 11,500 is short of the target of £200,000. Okay, so now the scenario changes to someone's been trading for 2 years. So same details as before, one applicant borrowing £200,000 on a 250k purchase, self-employed. This time the net profit is £50,000 for the current year. Previous years we looked at £42,000. And let's have a look what the borrowing will be now. £206,540. Now what happens with the vast majority of lenders when it comes to people who've been trading for a minimum of 2 years is they will take an average of the last 2 years' income to give an overall income, and that's what they will lend against. In this case, we're adding £50,000 and £42,000, which gives £92,000. Take an average of that, it's £46,000. That's why in this scenario, this person was able to borrow more because they've been trading for 2 years. Now, of course, in this hypothetical scenario, this person's income has gone up in their second year. Now, when you look to apply for a mortgage, you may actually be able to get what you need off 1 year's trading. So don't assume you can't get the borrowing necessary, providing you fit the lender's criteria after trading for 1 year as self-employed. However, if you are self-employed and you expect your income to rise year after year, then you may wish to wait and have at least 2 years trading behind you before you look to apply for a mortgage. As I mentioned up top, please speak with a broker. Go through your personal circumstances, go through your income, and you will find out exactly what you can do when it comes to borrowing and what mortgage options are available for you. Now, if you're self-employed and you have a scenario you want me to go through in a video, then comment below and I'll be more than happy to look at it for you.